All right, let's unpack this. You've asked for a deep dive into PCBL Chemical Limited's Q3 FY25 performance,
Yep.
and we've got a mountain of intel to climb here.
Yeah.
We're talking their official report to the stock exchange, the investor update they released,
Right.
and even a peek at the auditor's review.
What's fascinating here
Yeah.
is this isn't just any ordinary chemicals company.
Right.
PCBL Chemical Limited,
Yeah.
or as they were known until recently,
Mm-hmm.
PCBL Limited
Okay.
is part of the RPSG group.
Oh, wow.
They've got their hands in all sorts of pies.
Right.
And globally, no less.
Okay, so they're part of a bigger picture,
Yeah.
but what does that mean for their growth?
Right.
The investor update really hammers home this idea of PCBL being a global specialty chemical player.
Right.
Like they're shedding their old image as
Yeah.
just a carbon black company.
They're definitely broadcasting a transformation.
Yeah.
Even the name change itself.
Mm-hmm.
From PCBL Limited to PCBL Chemical Limited
Right.
signals a shift in focus.
So before we get lost in the numbers,
Okay.
paint a picture for us.
Sure.
Where does PCBL Chemical Limited stand in the market right now?
They claim the title of India's largest carbon black company
Wow.
and hold a respectable position as the world's 7th largest.
Okay.
But as you pointed out, they're
Mhm.
branching out.
Yeah.
They're producing specialty chemicals too,
Right.
and are actually a leading name in phosphonates.
And their reach goes way beyond India.
Right.
I saw mentions of facilities in other countries.
They're casting a wide net,
Yeah.
that's for sure.
Okay.
We're talking manufacturing facilities in India,
Mm-hmm.
the USA,
Wow.
and Saudi Arabia.
Okay.
And get this,
Yeah.
they're shipping products over 60 countries.
Okay.
Yeah.
That's a lot of ground to cover.
It is.
Let's zoom in on the financials then.
Okay.
What were the big wins for them in Q3 FY25?
Their financial performance this quarter is eye-catching,
Yeah.
to say the least. Revenue shot up by 21% year-on-year,
Wow.
hitting a cool Euro 2010 crore.
Okay.
A big chunk of this growth seems to be fueled
Mm-hmm.
by their success in boosting export volumes.
Now, a 21% jump is nothing to sneeze at,
Right.
but revenue's only part of the story.
Mhm.
What about their profitability?
Right.
Are they actually making money?
That's where EBITDA comes in.
Okay.
Essentially, it
Yeah.
measures their profit
Okay.
before factoring in things like interest and taxes.
Right.
Their EBITDA also saw a healthy 15% rise year-on-year,
Mm-hmm.
reaching 328 crore in Q3 FY25.
So a 15% jump in profit.
Right.
What does that tell us about how efficiently they're running things?
It gives us a pretty good indication. Their EBITDA margin,
Mm-hmm.
which is essentially the percentage of revenue
Yeah.
that translates into profit,
Right?
sits at a respectable 16%.
Okay.
That suggests they're doing a decent job of keeping costs under control and
Mhm.
turning sales into actual profit.
That makes sense.
Yeah.
Mm-hmm.
Growing.
Right.
They're
Yeah.
profitable.
Yeah.
And they even declared an interim dividend of 5.50 per share.
Right.
Seems like they're keeping investors happy in the short term.
Yeah.
But what about the bigger picture?
Sure.
Their 9-month performance should give us more to chew on, right?
Absolutely.
Okay.
If we zoom out and look at the consolidated figures, for the 9 months leading up to December 31st, 2024,
Right.
the growth is even more dramatic.
Okay, lay it on me.
Sure.
How dramatic are we talking?
Their revenue for those 9 months skyrocketed to 6,317 crore,
Wow.
a massive leap from 4,491 crore
Okay.
during the same period last year.
Wow, that's a serious increase.
It is.
But did their profits keep pace?
They did.
Okay.
They did indeed.
All right.
Their EBITDA for the 9 months clocked in at 1,066 crore,
Okay.
up from 742 crore the previous year.
Right.
This tells us they're not just growing for the sake of growing.
They're actually translating that growth into cold, hard cash.
All right, so they're financially fit
Yeah.
and growing like a weed,
Mm-hmm.
but they're not just sitting on their laurels, are they?
Nope.
One move that caught my eye
Okay.
was this joint venture, Nanovase Technologies Limited.
Right.
They're teaming up to develop nanosilicon products
Mhm.
for lithium-ion batteries,
Yeah.
which seems like a pretty savvy move.
That's right.
Yeah.
And they're not just dipping a toe in the water with this one.
Okay.
They partnered with Kindia,
Mhm.
took a controlling 51% stake,
Wow.
and have pledged a hefty $28 million over the next 2 years
Right.
to get this venture up and running.
They're putting their money where their mouth is.
They are.
What's a game plan with this Nanovase venture?
Yeah,
What are
it-
they actually trying to achieve?
The initial focus is on setting up a pilot plant.
Okay.
But the long-term goal is clearly to scale up
Mm-hmm.
to a full-blown commercial manufacturing facility.
So they're aiming to become a key player in the electric vehicle market.
That's right.
That's a bold move,
It is.
considering how competitive that space is.
It's a sign they're not afraid to shake things up.
All right.
And this push into new technology aligns with another key takeaway:
Okay.
their obsession with expanding capacity.
Yeah.
It's not just talk.
Right.
They're putting plans into action.
Yeah. The report to the stock exchange mentions the second phase of their specialty chemical capacity expansion at the Mundra plant
Right.
is already up and running.
Right.
And didn't they snag a big plot of land for a new carbon black plant?
They did indeed.
Okay.
116 acres in Andhra Pradesh,
Wow.
all earmarked for a brand new carbon black facility.
They're definitely not slowing down.
Nope.
Is there a method to this madness? Is there a strategy driving all these expansions?
Absolutely.
Okay.
If we connect the dots,
Mm-hmm.
they're laser focused on a few key areas.
Okay.
First, they're going big on brownfield expansion at their Tamil Nadu facility.
Okay.
This isn't just for carbon black production.
Mm-hmm.
They're also ramping up green power generation.
Oh, okay.
Then there's the expansion at their Mundra plant,
Right.
specifically for specialty black capacity.
Okay.
And let's not forget the boost they're giving to Aquafarm chemicals,
Yeah.
adding a whopping 38,000 MTPA to their capacity.
All right.
This all points to some seriously ambitious growth plans.
And they're not shy about their ambitions.
Right.
I recall them mentioning a target of hitting 1 million MTPA carbon black capacity within the next 2 to 3 years.
You've got a good memory.
Thanks.
They're very clear about wanting to dominate the carbon black market.
Okay.
And it's not just about scaling up existing operations.
Right.
They're also pouring resources into developing new products.
Which makes sense if they want to stay ahead of the curve.
Exactly.
What kind of new products are they cooking up?
On the specialty chemicals front,
Yeah.
they're expanding their phosphonate lines,
Mm-hmm.
particularly those geared towards the oil and gas industry.
Okay.
And of course,
Yeah.
there's the whole nanosilicon additive game for lithium-ion batteries,
Right.
which they're spearheading through their joint venture.
So they're keeping their finger on the pulse of future trends, but it's not all about growth and shiny new products, is it?
No.
Sustainability seems to be a key factor as well.
You're spot on.
Okay.
They're not just chasing profits.
Right.
They're committed to doing things the right way.
Yeah.
They even earned the International Sustainability in Carbon ISCC PLUS certification,
Right.
which is no small feat.
That definitely sends a message about their commitment to sustainability.
It does.
And their focus on green power generation backs that up. So they're growing, expanding,
Right.
innovating, and going green.
Hmm.
Is there anything else we should know about their strategic moves?
They've got high hopes for international growth, particularly in European markets.
Right.
They're also broadening their product lines in the Middle East and North Africa.
They're really covering all their bases.
Hmm.
Before we move on,
Go.
how about a quick gut check on their financials?
Sure.
Did the auditor's review raise any red flags?
Not a single one.
Really?
S.R. Batley Boy & Co.,
Oh,
LLP.
okay.
Their auditor
Mm-hmm.
gave both their standalone and consolidated financial results a clean bill of health.
Wow.
No material misstatements,
Okay.
which is always reassuring.
That's good to hear.
It is.
Okay, we've covered a lot of ground,
Right.
company overview, financial performance, and their strategic moves.
Yeah.
Before we move on, I'm
Sure.
curious to get your take.
Sure.
What's jumping out at you from all this information?
What strikes me is how PCBL Chemical Ltd. Is firing on all cylinders. They're
Right.
showing strong financials, they're aggressively expanding, and they're clearly looking ahead to the future.
It's like they're not content with just being a leader in carbon black.
Right.
That transforming themselves into a multifaceted player in the global chemical arena.
That's right.
What do you think?
I think so.
Are they on the cusp of a major breakthrough?
They've certainly laid the groundwork.
Okay.
Stay tuned,
All right.
because in the next part,
Mm-hmm.
we'll delve deeper into their segment performance.
Okay.
We'll break down how their different business units are contributing to their overall success.
And we'll dive into their balance sheet and cash flow statement, uncovering the financial muscle behind their ambitious growth.
Look, it's good.
Don't go anywhere.
Okay.
We'll be right back.
All right.
Welcome back. All right, we left off talking about PCBL Chemical Limited's big picture strategy.
Right.
Now, let's break down how their different business segments are performing.
Okay.
I'm especially interested in seeing how these segments are shaping up with their push into specialty chemicals and, of course, the big splash they're making in battery tech with nanobase.
Right.
Where should we start?
Let's start with their bread and butter,
Okay.
the carbon black segment.
Okay.
It's still a major revenue driver,
Right.
even as they diversify.
Okay.
In Q3 FY25, it generated 1,647.52 crore,
Wow.
which is the lion's share of their total revenue.
So even with all this talk about transformation,
Yeah,
carbon black is still their cash cow.
pretty much.
But are they actually squeezing good profits out of that segment?
Their carbon black operations are definitely profitable.
Okay.
For Q3, the segment profit before interest and tax, or as the finance folks call it,
Yeah.
PBIT,
All right.
came in at a healthy euro 251.06 crore.
Okay, so those carbon black profits are nothing to scoff at.
Right.
How does that compare to their past performance? Are they keeping up the momentum?
If we look at the 9-month figures,
Okay.
their carbon black segment has been consistently strong.
Right.
Their revenue for that period reached 5,134.9 crore.
Okay.
And their PBIT for the 9 months totaled 827.32 crore.
Wow.
So yes,
Yeah.
they're maintaining a pretty solid track record in their core business.
All right, so carbon black is still a powerhouse for them.
It is.
What about their power segment?
Okay.
Didn't they mention expanding their green power generation?
They did.
Yeah.
But it's interesting. Their power segment revenue is comparatively small.
Right.
Only 64.87 crore in Q3 FY25.
Okay.
And their green power generation actually dipped this quarter,
Really?
down 5% year-on-year to 161 million units.
Huh. A dip in green power generation.
Oh.
That's a bit unexpected.
It is a bit.
What do you make of that? Is it a sign of trouble or just a blip on the radar?
It's hard to say for sure without more context.
Right.
It could be due to a number of factors, maybe maintenance downtime,
Yeah.
fluctuations in demand, who knows?
Right.
It's something to keep an eye on.
Yeah.
But I wouldn't hit the panic button just yet.
Okay, fair enough.
Yeah.
But despite the dip in generation,
Right.
are they still making money in their power segment?
Oh, absolutely.
Okay.
Even with the decrease in generation, their power segment, PBIT for Q3 FY25, landed at a respectable 37.62 crore.
Okay.
It's a solid contributor to their overall bottom line.
All right, let's shift gears to specialty chemicals.
Okay.
This is where things start to get really interesting.
Yeah.
Especially with their acquisition of Aquafarm Chemicals and all their expansion plans. What's the story there?
Their specialty chemicals segment is definitely showing promise.
Okay.
In Q3 FY25,
Yeah.
Aquafarm Chemicals pulled in a revenue of 328 crore
Right.
and an operational EBITDA, which again gives us a sense of their profitability of 51 crore.
Those are some pretty impressive numbers.
They are.
And looks like they're just getting started.
Yeah.
The investor update mentioned a 70% capacity utilization rate at Aquafarm.
Right.
With sales volume hitting 22,796 metric tons during the quarter.
That's right.
They seem to be in a great position for growth in this segment.
They are.
Okay.
And their plans to further expand Aquafarm Chemicals, adding another 38,000 MTPA of capacity by March 2025,
Right.
shows just how serious they are about making a splash in the specialty chemicals arena.
It's like they're building an empire.
It seems that way.
Okay, now for the question on everyone's mind,
Okay.
what about Nanovash, their battery tech venture?
Right.
Is it bringing in any revenue yet?
Not quite.
Okay.
Nanovas is still in its early stages.
Right.
Remember, they're focused on getting that pilot plant up and running and figuring out how to scale up for commercial production.
Right.
So it's not a major contributor to their financials yet.
So it's more of a long-term play,
Yeah.
but it's definitely a segment to watch closely.
Absolutely.
Especially given the explosive growth in the EV market.
It is a hot market.
Okay, so we've gotten a clear picture of how their different segments are performing. Now let's dive into the nitty-gritty of their finances. Okay.
What can their balance sheet and cash flow statement tell us?
Their balance sheet paints a picture of a company with a solid financial foundation.
Okay.
As of September 30, 2024, their total assets were valued at 11,744 crore.
All right.
A big chunk of that.
Yeah.
7,579 crore, to be exact, is tied up in fixed assets, which includes things like property, plant and equipment.
So they've invested heavily in infrastructure and building up their capacity.
They have.
Makes sense considering all the expansions we've been talking about.
Right.
What about their liabilities?
Okay.
How much debt are they carrying?
As of the same date, their total liabilities also stood at 11,744 crore.
Okay.
A significant portion of that, 4,750 crore,
Right.
is in the form of borrowings.
Wow. That's a lot of debt.
It is a sizable amount.
Should we be concerned?
Not necessarily.
Okay.
Debt can be a useful tool for growth,
Right.
especially for a company like PCBL that's in expansion mode.
The key is to make sure they're managing that debt responsibly.
How can we gauge whether they're handling their debt well?
One important metric is their debt-to-equity ratio,
Okay.
which compares their level of debt to their equity.
Right.
As of December 31st, 2024,
Mm-hmm.
their debt-to-equity ratio was 1.34.
Okay, so they are using debt to fuel their growth.
Right.
But what does that ratio actually tell us?
Well,
Is it a good thing or a bad thing?
it's not inherently good or bad.
Okay.
It really depends on the industry and the company's specific circumstances.
Mm-hmm.
A debt-to-equity ratio above 2 is often considered risky,
Right.
but for a capital-intensive industry like chemicals,
Yeah.
a ratio of 1.34 isn't necessarily alarming.
All right, so we need to dig a little deeper to understand how sustainable their debt levels are.
Right.
Their cash flow statement should give us more clues, right?
It should.
It basically tells us how much cash they're generating and how they're managing their money.
Yeah.
What does it reveal?
For the 9 months ending September 30, 2024,
Okay.
he generated 434 crore from their operating activities.
All right.
This positive cash flow from operations is a really good sign.
Okay, why is that?
It means they're making enough money from their core business activities to cover their day-to-day expenses.
Mm-hmm.
And importantly,
Yeah.
it gives them the cash they need to service their debt.
That makes sense.
Yeah.
So they're not just relying on borrowed money to stay afloat.
Right.
They're actually generating cash from their operations.
Exactly.
But what about all these investments they're making?
Yeah.
Those expansions have to be eating up a lot of cash, right?
You're right. Their investing activities,
Mhm.
which are primarily capital expenditures,
Right.
used up 413 crore during those 9 months.
Okay.
That's to be expected given their focus on expanding their capacity and building new facilities.
So how are they financing all these big investments?
Okay.
Are they taking on more debt?
Yeah.
Issuing more stock? Or what?
They've been using a mix of financing methods. They've taken on some additional borrowings,
Right.
issued share warrants,
Okay.
and raised funds through equity shares and compulsory convertible debentures.
Wow. So they're pulling out all the stops.
It seems so.
But they've also had some significant cash outflows
Yeah.
for things like dividend payments,
Yeah,
interest payments,
Right.
and lease liabilities.
that's correct.
So it sounds like they're juggling a lot of moving parts,
Mm-hmm.
trying to balance their investments with their financing activities.
Right.
Is there anything else that jumps out at you from their cash flow statement?
Let me see.
Anything we should be paying close attention to?
One thing to note is that their cash and cash equivalents
Right.
decreased by 130 crore during those 9 months.
Wait, so they're actually burning through their cash reserves?
Yeah.
Is that a red flag?
It's not necessarily a cause for alarm.
Okay.
It could simply be due to timing differences
Mm-hmm.
between when cash comes in and when they have to pay out.
Okay.
But it's definitely something worth monitoring
Right.
as we assess their overall financial health.
Okay, so their cash position needs a closer look.
I think so.
Overall,
Yeah.
how would you grade their financial health at this point?
I'd say they're in a pretty strong position.
Okay.
Their revenue growth is impressive.
Right.
Their profit margins are healthy.
Mm-hmm.
And they're generating positive cash flow from their operations.
Right.
This suggests they're well equipped to manage their debt
Okay.
and continue investing in their future.
Great points.
But
Yeah.
it's important to keep an eye on their cash position and their debt levels, especially as they continue to expand.
So we've dissected their financials.
Yeah.
And it's clear they're making bold moves and performing well.
Mm-hmm.
But I'm really curious about what all of this means for their future,
Right.
especially their gamble on the electric vehicle market.
That's where things get really interesting.
Okay.
We'll explore the potential impact of their push into nanosilicon battery technology and how it could reshape the entire EV landscape.
Sounds good.
Stay with us.
We're back. for the final stretch of our deep dive into PCBL Chemical Limited.
Yeah.
We've scrutinized their financials, dug into their expansion plans,
Right.
and explored their foray into the world of specialty chemicals.
Yeah.
But now it's time to zero in on what could be their biggest game changer yet.
Right.
Their venture into nanosilicon battery technology through Nanovase.
This is where things can get really interesting.
Yeah.
It's not just about PCBL's future.
Right.
It's about the future of electric vehicles.
Right.
Everyone's watching this space.
Yeah.
And battery technology is the key to unlocking its full potential.
Exactly. The EV market is buzzing with activity, but range anxiety is still a big hurdle for a lot of potential buyers.
Yeah.
If PCBL can crack the code on commercially viable nanosilicon batteries,
Right.
they could be the ones to kick that hurdle out of the way.
And they're not just dipping their toes in.
Right.
They're going all in. Remember that $28 million commitment they made?
Yeah.
They're putting serious resources behind Nanovase.
Okay.
But before we get ahead of ourselves,
Yeah.
what's so special about nanosilicon battery tech in the first place?
Yeah, break it down for us. What's the big deal about silicon?
It all comes down to energy density.
Okay.
Silicon has the potential to store way more lithium ions than the graphite that's typically used in battery anodes.
Okay.
More lithium ions mean higher capacity.
Right.
And it translates to longer range for EVs.
So we're talking about electric cars that can go much farther on a single charge.
Exactly.
That's a pretty big deal for drivers who are worried about running out of juice on a long trip.
Absolutely.
Right.
If PCBL, through Nanovase, can figure out how to produce nanosilicon batteries at scale and at a reasonable cost, they could be the ones to eliminate range anxiety.
Okay.
That would be a game changer for EV adoption.
It's not just about range, though, right? I've heard whispers about faster charging times and even safety benefits.
You're right.
Okay.
There's more to the story.
Fill us in.
Nanosilicon could potentially enable EVs to charge much faster than they do now.
Okay.
Which would be another huge plus for drivers.
Right.
And some research suggests that nanosilicon could actually lead to safer battery chemistries.
Okay.
Reducing the risk of overheating
Right.
and those scary battery fires we sometimes hear about.
Okay, so we're talking longer range, faster charging,
Yeah.
and potentially safer batteries.
That's right.
That's a trifecta of benefits that could really shake things up.
Exactly.
Yeah.
And let's not forget the sustainability angle.
Right.
PCBL is emphasizing that Nanovetch's technology is environmentally friendly with a much lower energy footprint than traditional battery manufacturing.
That's a big deal these days,
It is.
especially with all the focus on reducing our carbon footprint.
Right.
So it sounds like PCBL is making a smart bet on nanosilicon.
I think so.
But as with any emerging technology, there are bound to be challenges.
There are always hurdles to overcome.
Right.
Scaling up production to meet the demands of the EV market won't be easy.
Right.
There are technical challenges to solve, and they'll need to find ways to bring down costs to make these batteries commercially viable.
And let's not forget the competition.
Yeah.
There are tons of companies racing to develop the next generation of battery technology.
Right.
It's a crowded field.
It's definitely not a guaranteed win for PCBL.
Right.
But they do seem to have a few things working in their favor.
Like what?
Well, for starters,
Yeah.
they're moving fast and decisively.
Okay.
They're not afraid to invest heavily in Nanovase.
Right.
And their partnership with Kindia gives them access to some valuable expertise.
And let's not forget their existing strengths. They're already a major player in the chemicals industry
Right.
with a global footprint
Yeah.
and a proven track record of growth and innovation.
All of those factors could give them an edge as they try to scale up production and bring their nanosilicon technology to market.
So what does all of this mean for PCBL Chemical Limited's future?
That's the big question.
Are they about to become a leader in the EV revolution?
It's still too early to say, for sure.
Okay.
But their push into nanosilicon batteries has the potential to reshape their entire business.
Wow.
If they pull it off,
Yeah.
they could become a dominant force in the electric vehicle industry,
Okay.
not just as a supplier of materials,
Right.
but as a true innovator driving the future of battery technology.
That's a pretty bold vision.
It is.
Do you think they can pull it off?
They've certainly set themselves up for success.
Okay.
They're not just following trends, they're trying to create them.
Yeah.
That's a hallmark of a company that's not afraid to take risks and push the boundaries.
It's definitely a story worth following.
It is.
Now, here's a thought for you to chew on.
Okay.
Imagine a world where electric vehicles are the norm, powered by batteries that have significantly longer range charge in minutes and are incredibly safe. PCBL Chemical Ltd.
Yeah.
Through their work with Nanovase, could be one of the companies making that vision a reality.
It's possible.
It's an exciting possibility.
It is.
And that's a wrap on our deep dive into PCBL Chemical Ltd's Q3 FY25 results.
All right.
We've journeyed from their financial statements to their bold strategic moves. And it's clear they're a company in motion.
Right.
They're embracing innovation, pushing the boundaries of their industry, and setting their sights on a future where they're not just a leader in carbon black, but potentially a driving force in the global transition to electric vehicles.
It's an exciting time for them.
Thanks for joining us on this deep dive.